My name is Tim Ord. I'll be the host today. My website, if you'd like to find me and subscribe to me, is www.ord-oracle.com. Obviously, I've been on here a few times before, and Tommy's out for the day, so I'll be taking over, and we'll start right now. All right, this is the monthly SPX. Goes back to, looks like about 2020. Covered this chart before. The only thing is just kind of a repeat to show what's going to go on, in my opinion, what the future beholds here. And anyhow, the bottom window is the SPX VIX ratio. And as long as those ratios are making higher highs, along with the S&Ps are making higher highs, that's a bullish divergence, and suggests this is on a monthly time frame. So we're going to look at the monthly, the weekly, and actually you can go down for the daily, but the monthly is most important because the monthlies rule the weeklies rule the dailies, and so on down the line. And right now we got a bullish divergence, not over yet, but it looks promising. But the SPX VIX ratio is making a higher high, and today we did touch a new high on the SPX. So as long as this keeps making higher highs and the SPX keeps making higher highs, that suggests the market will continue higher. So the monthlies are bullish. We'll flip down to the dailies. We showed this today, Thursday. It'd be Tuesday. We actually had a divergence, but this is Tuesday's chart here, and it shows, I wanted to show the positive divergence here. The SPX VIX ratio is making a higher high. The S&Ps were making a lower high. That suggests at some point the S&Ps will make a higher high, and here we are. We're making higher highs. Kind of add to the bullish divergence. This is a kind of an indicator that I developed over the years. Works really well. Works similar to what the Zwag breast thrust indicator does, but it's a little bit different take. This is advanced decline with the advance over NYSE advancing issues over the NYSE declining issues, and it's a 5-day average. That's go from 0.7 to 0.3 in 21 days. So it's basically a month. We did get a trigger. We don't have the exact dates, but this thing was triggered back in November and went from below 0.7, and we did get a hit. We did hit 3, and so that was triggered. And all these times before, these pink areas are the times when those indicators were triggered. We had going into that 2022 bottom, we pretty much had 4 of them in a row, pretty much all the same price level. So once you get them, that's pretty much ends the decline. I mean, it went a little bit down here for low and a little bit here, but in general, once this indicator starts triggering a buy signal, sometimes you get multiple ones, but normally you're all in the same vicinity. That tells me the market's building a base. Last time that's happened was the April bottom. We got a big run up and actually stayed there, suggesting a large rally is coming. That kind of surprised me how far it went, but it is what it is. And now we got another one. So we're in the midst of a rally to the upside. We'll just have consolidations, but in my opinion, the bottom's in. So how high is high? It's kind of hard to say. I think this year will be a double-digit year because once one of these bullish indicators get triggered, at minimum, they're multi-month rallies. They're not like a week or two. They're multi-months. So we'll rally into next year. How far into next year? Maybe the whole year. But I think next year could be a double-digit. You talked to me about a month ago. I thought we were building some sort of a top. I don't think that's the case anymore. Not with this indicator triggering a bullish divergence, and also the monthly SPY VIX ratio giving a bullish signal. The weekly is giving a bullish signal. Other than minor consolidations here, we expect the market in general to continue higher, possibly for a long time. We did have a reader on last Tuesday. We were talking about what are some of the indicators or some stocks or indices you wanted me to look at. I got a listener that did email me this one. This is the Russell 2000, and there's really nothing wrong with it. We got a sign of strength starting basically around pretty close to that April timeframe bottom, and volume's just still increasing here. This month's not over. It's not even half over yet, but it almost looks like we'll probably meet pretty much the volume that we had November volume. So this is actually a good sign. No sign of a top. It's been up, I don't know, it looks like 6-7 months in a row, and it looks like this month will be the 7th month, the 7th, not 8th month in a row. We do have support around 240, which is basically the previous highs, but you got a sign of strength going here. Don't even see a worthwhile consolidation forming. So it looks good. So I hear the music, I'm hanging on. All right, welcome back. We're starting another, we're going to look at gold here. We were looking at the S&Ps. Now we're going to start looking at gold. This is a repeat, but it's critical, or it's not critical. It's worth knowing what the bigger cycle is doing. And we just had initiation of an uptrend. This is what that means is this is the start of a major move to the upside. And how you identify those, the middle window is the XAU to NASDAQ. In other words, it's the gold stocks compared to the NASDAQ stocks on a monthly time frame. And I put an RSI with that. And when initiation of an uptrend, when this RSI on the monthly XAU NDX gets above, or preferably hits 70, and this is exactly what we did back probably a couple of months ago. Even though the low came in 2024, this rally had to continue off that bottom to trigger this RSI above 70. That's exactly what happened. So I'm expecting, I think this is probably going to be a 12-year cycle. Things may change. For instance, if the RSI falls way below 50s, it gets down to 30 again, that would imply that upcycle is ended. So, but right now, we're coming in on the RSI around close to 70, 69, right, vicinity of 69 right now. And so this initiates an up move. You have the consolidations away, back in the last time we got a signal. This is a 2000 bottom. We had some sideways pattern in here. Some are multi-month, but in general, the market worked higher for 12 years from 2000 to 2012 in general. Then went personally down to sideways for about 12 years. Now we got initiation again to the upside. So that's the bigger trend. So we'll step back and take a look at the smaller trends. And this is the monthly inflation-deflation ratio. This is Robert Pring developed this. I think his name is Robert, the Pring. He's been around for years, and he created this inflation-deflation ratio. I use a monthly time frame, and also put an RSI with it. And this chart goes back to 1994. And how do you get a signal out of this chart is when the monthly inflation-deflation ratio, RSI, gets above 60. We're at 69.75 right now. This is at 2000 bottom here. That's inflation. Yeah, this is 2000 bottom here, and it rallied up. What it picked out was the consolidation. This is the RSI chart right here, and it picked out the sideways consolidations. So the market did hit a top, but went sideways. What I'm saying here, we're up around greater than 60. We're coming in almost 70. And so at some point around this vicinity, we're probably going to start a consolidation, and the market may just move sideways here. This is an XAU, may move sideways in that 300 vicinity, thereabouts. So when does the consolidation start? On a monthly chart, they can actually push a little bit higher. It's kind of hard to see, but they kind of hang up here. So I'm thinking we're getting close to a high here on the XAU, and we're going to go down to a smaller time frame. This was last Tuesday's chart. I left it on, and I wanted to say that we're probably going to hit a higher high and go back up and test the October high. And the reason why I said that was because of this chart. The bottom window is the advanced decline cumulative for GDX, and next window higher is the cumulative up-down volume for GDX, and the top window here is the GDX. And this indicator, even though GDX hit a high in October, it came back down and kind of wiggled back up, both those indicators were still making higher highs and higher lows, suggesting at some point the market's going to make a higher high. So the internals were doing fine. Most gold stocks were still on their rally phases, and so now we're back up testing. This is today's chart now. So this is last Tuesday. It was a bullish divergence. Both indicators making higher highs, higher lows. GDX has not made a higher high yet, and today we're making a higher high. We're above the October high when I made this chart, and what's happening right now, we're just matching. It's kind of hard to see those indicators, but we're just matching the previous high. Even though GDX is making a higher high here, both those indicators are just testing their previous high. So if that divergence persists, say over the next couple of days, that would suggest the October high is going to have some resistance, even though we're through it. The market is starting to put short-term divergences. So we got an intermediate-term divergence on this chart, which is inflation-deflation ratio, RSI, hitting over 60, almost 70. So on a monthly time frame, suggesting we're heading into a consolidation. The monthlies, or the dailies now, which is this one, are giving minor divergences, and so I'm kind of leaning. I haven't pulled the trigger on GDX yet. A lot of times these trades come on Fridays. Usually Thursday's not a great trade day. Normally Fridays are. And we'll see what tomorrow. If this divergence is present, I may pull the trigger on GDX, maybe a step to the sidelines. Not a top of a major importance, but it could flip sideways for weeks and possibly months. Don't know. Here's another indicator, a little bit different one. It's just an RSI on the XAU. This is a monthly chart. I got two of them indicators. I got full stochastics on the monthly chart, and I got an RSI on the monthly chart. This chart goes back to 1984, or actually 94, and shows all the times when the full stochastics got above 80 and the RSI got above 70. We're hitting 82 right now. So both of them haven't turned down yet. So you got two longer term charts kind of saying the same thing. We're due for some sort of a consolidation. And so how big that consolidation is, I think will be multi-weeks, because if you look at the 2000 GDX 2000 low, it picked out those consolidations pretty well. There's one there, that's one there, and all there's 1, 2, 3, 4 of them. This one turned out to be we had some sort of a scare. I forgot what it was. I think banking crisis or wherever it was. But all of them moved sideways for multi-months. And that's why I'm thinking this could happen here. That would say to me that the major issues may consolidate, like Newmont Mining, AEM, all those big ones may consolidate, where the secondaries are starting to come to the forefront. I think that's what's coming. I've been saying that for a number of weeks. I still think that's going to be true. So we'll see how that turns out. Time's kind of running out here. I'll be on the last segment too. So this is Tim Ord. Stay tuned. Segment, got a couple of minutes to go, but anyhow, the monthly charts again rule the daily chart, or rule the weekly charts rule the daily charts, and so down. But upside, in my opinion, since you got stochastics all the way up to actually it's 91, anything past 80 is bearish. it's kind of late in the game. So we did have a great run in 2025. We made consolidation. Could start at any time. The weekly charts are still fine. Just this daily chart here, if tomorrow we keep pushing higher, and both of those ratios start to still push higher, I'll be holding on to my position. But for some reason we back off, then that GDX position I have, I think it's around 75 or give or take. I may blow it out, but it's too soon to say yet, because these divergences, if the market has to keep going up for those divergences to go away, and I'm not sure that'll happen or not. That's the reason I'm waiting until tomorrow, so I can look at the weekly charts too. But it's not if I do get out, there is support around the previous lows, around 70, I think, somewhere in that range, and that'd be an area I look for re-enter back into the position again. So I'll have to wait and see what develops. But on a bigger time frame, it remains bullish. But on a short term, this is a daily chart. It's nothing really panic, about you have to get out of GDX, because long term GDX is going to go much higher. It's just the intermediate term that may flip sideways. So that's some indicator, or these short term indicators I'll have to watch, decide what happens next. But as it sits right now, I'm still long GDX. So that is my segment. So thanks for tuning in. I'm Tim Ord of the Ord Oracle, and we'll talk to you next Tuesday. Love you.